Welcome back to the channel. I'm Foreman and I'm going to be talking about the UK stocks that I'm buying right now. This week has been extremely volatile, with the FTSE 100 being up by 1.11%, the FTSE 250 being up by 0.48%, the S&P 500, as of recording this video according to Google Finance, is down 1.59%, and the Nasdaq 100 is down 2.48%. My portfolio is down 4.47% this week, and I have significantly underperformed. And in fact, if we look at my spreadsheet that I am still currently in the process of developing, and then I do plan to release it, although it will be on Patreon, we can see that my annualized returns, which is basically each year, is minus 11%. For fun, I put that through a compound interest calculator, and I looked at a period of 40 years, assuming that I could deposit, I believe, £1,000 a month, which I don't know if that's reasonable. Over a 40-year period, instead of having some huge gain, you'd only end up with about £100,000, and I think the interest was minus in total something like £300,000 to £400,000. But I derail, and if you like that kind of analysis, please drop one of these to help beat that YouTube algorithm and support the channel, or drop one of these because they've removed the dislike button, and I really disagree with that. But as we can see, the portfolio itself is certainly struggling a little bit, but I'm trying to take advantage of this and I'm trying to buy the dip. We can see that currently 45% of my portfolio is held in Boohoo, then followed by 32.3% in Games Workshop and 22.7% in Argo Blockchain. If I really had to change any of these, I would like to improve my exposure to both Boohoo and Games Workshop, whilst not necessarily buying any more shares of Argo Blockchain, because I lack conviction in this holding, and I still believe it was a critical mistake that I made earlier in the year. But when we compare this spreadsheet to the one I made just over a year ago, I've updated it somewhat, so the stats are going to be completely wrong. Just look at the difference. Like, you can see there's like such a stark difference in terms of actually what was there and how I'm using Excel. And I've only really been using Excel/Google Sheets properly for about the last month and a half, so it goes to show how much progress there really can be. So if you are interested in that spreadsheet, I will be looking to finalize it, at least do as much as I can, create a template version, and then release it on my Patreon, so stay tuned for more details. The City of London is looking to improve London Stock Exchange because they're trying to reinvent themselves, as a fund manager had derided the UK's financial centre as a Jurassic Park devoid of growth and innovation. Supposedly they've got some new rules that have come into force today to lure more technology firms and growth orientated companies to list in London, and that they said that firms issuing a dual class share will be allowed to list at the top tier of the London market, which is designed to encourage founders to take their company public while remaining significant stakes. And this is to try and reverse what's been happening in the last few years, in which the London Stock Exchange has certainly been falling behind, especially with the likes of the Brexit referendum, amongst other things. Something I found particularly amusing is this comment: the City of London is in danger of becoming a sort of Jurassic Park where fund managers dedicate themselves to clipping coupons. And to be honest, it's not far wrong. And this is because UK fund management sectors are obsessed with dividends and income-based funds. Don't get me wrong, we are advantaged to take the most out of dividend income. After all, we are favourable, and certainly inside of tax shelters, dividend income seems like one of the more promising aspects to use. But when we have a capital gains allowance of £12,300, it almost seems like growth could be a little bit more valuable if more people decided to invest in it. So it will be interesting to see how the London Stock Exchange adapts, and perhaps what new rules they come into place, because at the moment, I believe it said earlier that they take up 5% of all global IPOs, which, to be fair, isn't truly that bad considering the exchange's dominance as a whole, which is sitting around 4 to 5%, likely now less after selling the Italian stock market arm. Bitcoin this week is actually down by 3.72%, and this is obviously the contrast to the portfolio, which is down by more than that. However, that hasn't stopped a company like Argo Blockchain from dropping quite a bit as well, and for some reason, they have now built some walls. You hear this? They've now built walls in their Helios facility. And to be honest, it actually looks very big, and they have added a slight bit of a roofing to it as well. And if you look at the pictures, other than the fact that they look like someone has got a Nintendo DSi and taken pictures like that, with the quality of it, it looks okay. It looks massive. I'm hopefully trying to find the actual image itself. I believe it's on the next tab, in which you can see the actual scale of this facility, where there's a long shot. Where is it? Here, and you could imagine the amount of equipment that they will have in here. I do find it a bit interesting that everyone is certainly a bit hyped. Like, you follow the Argo Blockchain Twitter page, there's a lot of people going, oh, well, they used to be at least going to the moon. Oh, yes, this is great, guys. when in reality all they've done is built the shell or maybe the infrastructure to this facility. And based on the Q&A that they had done today, I believe, as of recording this video, December 2nd, December 3rd, Peter Wall had mentioned that they still plan for this Helios facility to be completed, at least a 200 megawatt portion of this, by I believe March 2022, but I might be wrong as I am trying to base this off of memory. And that he has mentioned as well that they obviously, whilst the cost of it is going to be north of 1 billion in terms to get this facility up and running to its full potential 800 megawatts, they've mentioned that they're going to look for strategic positioning or timing in which then it makes the most sense to expand out. So just because they're going to have a 200 megawatt facility here, this in 2022, they believe, or he believes, will be enough in terms of hash rate. So they're going to pace it out a bit and then use the opportunist moments where the timing is right to therefore expand by another 100 or 200 megawatts and slowly but surely build up their facility, which makes a lot more sense to me, as I was a bit concerned over the costs to really create a facility as big as that. And it will be interesting to see what they do with their hodl in time, because otherwise they are going to have to keep building up debt, such as the senior notes at 8.75% interest rate, which is already quite high, and then to see whether they will start diluting shareholders again. Don't get me wrong, a minor dilution is fine, but when you dilute shareholders quite greedily, I'm not a fan of that, hence why I'm not buying any more shares. Instead, I'm just going to hold. I do believe there is a long-term prospect for the shares of Argo blockchain. I do think there is potential for growth. However, I don't want to expose myself anymore to this stock because, quite frankly, I don't believe in the underlying asset of Bitcoin. I do think it can continue to go up in value as of its use case, especially in those emerging markets where their main currency isn't stable. At least then they've got something to put their money into that they then have control of. Although it still isn't with my understanding, as I like to invest in stocks that are truly simple. As I've said before, I think Argo blockchain was a mistake to buy at the time. I bought into the fear of missing out, the FOMO, and now I'm looking to calm down a bit. I'm looking to put my money elsewhere, but I will keep holding this stock because I do think they have potential and I do think they are significantly undervalued to their peers in the industry. And if you sign up to my stockbroker Freetrade, you can actually get a free share worth up to at least £10 or up to £200 from now until December 14th. So if you want to, sign up using my link in the description down below to get that free share. This is a news article that I had actually missed last time, and this is actually the Games Workshop headquarters in Nottingham was shut until further notice due to sewer collapse, due to a major sewage collapse. And I really hate how spammy this is on my screen. It's doing my head in. I hate these like news pages that are just like, yeah, we're gonna throw this, do you want cookies, yeah, do you want this? It's just horrible. And I've even got ad block on, and I know I'm a YouTuber that's just said that I'm using that. Quite frankly, if you're using ad block, I do not mind at all. I'm not trying to run this channel for a profit, but any money it does make, obviously I do see as a benefit, and I will use it, you know, as a business to then grow in the future. But it was on the 22nd of November. This might have been why shares had quite a tumble in the week before last, and that the road was completely closed off, that they did apologise. And I've been trying to look on the Warhammer World page, but it seems like they might be open again, although I'm not entirely too sure. There isn't any major service updates, and as far as I'm aware, they are back to schedule, but this could have impacted their major deliveries, or at least their production, because I do believe that their main facility in which they are creating a lot of the miniatures is in Nottingham. I don't know if it is the same as their head office or headquarters. I need to do further research to understand this, but that certainly could have posed a short-term threat. But then any company could truly be exposed to this unless they are diversified in location, which I believe Games Workshop is. Now this is from memory and from the annual report. I believe they have 4 main bases. I think they have one in Australia, obviously one in Nottingham, and I believe one in, I want to say in Egypt or something. I remember it being like some kind of, I believe so, I'm probably wrong. I think it was Memphis, but I have a feeling that might actually be in Australia rather than the one in Egypt, as I think the one in Egypt could be a lost city. Anyway, I completely lose the point. The idea is that I think they should have a few more bases where they can build from so that these outages wouldn't impact them as much. But I guess that's the the sort of growth of a larger company and what they may do looking forward. Overall, I've not bought any more shares of Games Workshop, although I am very much interested. I just don't think the value is there at the moment, and I think compared to another one of my holdings, I want to be buying the other one first because they are trading at a ridiculously low valuation compared to Games Workshop. But I do really like Games Workshop's business model in delivering value to their shareholders and also their customers, so I will likely be topping this up at some point once another holding looks a lot less favourable. And Boohoo has actually been opening their doors to a Debenhams beauty store. And this is exactly what I mentioned about over a year ago. I think the first idea when they were looking to acquire Debenhams, I was like, that beauty segment, that's going to be huge. There's a whole other industry of growth there that they can really expand out into it. And if it does well in Debenhams, obviously they can push it along their other brands. I do like the idea that they've created a store. You might go, but wait, an online retailer's advantage is it being online only and not having the upkeep of a store. This is just one store, and now I knew someone that did work at Debenhams much prior to the collapse, obviously, and he was quite a big manager up in the firm. And I believe the Manchester store was in the top 5 in terms of the total revenue it was generating. So it is certainly a good location, although maybe not one with the greatest footfall, still very much an impressive one to see. I do like how they've also got Debenhams.com as well, really signifying the online brand. But they do mention that actually they want to show that it is mainly an online store, and you can see in the image all of the screens in the background. It's a shame it crops a little bit too high because I'd love to see if there is actually clothing there or if it's just screens. It would be interesting to see. But they did mention that the store size is going to be 7,552 square feet of retail space. And I don't know, that is a massive amount of space. I think that is probably, it's a considerable size. And I can't remember the size of a football field, but it's going to be a big store. And it will be interesting because even if it's not making a profit, right? I think it's a good marketing campaign. It's on the high street. People are going to see it. People might even travel towards it on purpose. And I think that even if it's losing money, it's brand awareness, and that's what's important. So they could probably even afford to mark down the prices of some of their clothing in that store to get some volume through, although they could even do that online. Perhaps I will be interested to see this, and if I had the spare capital, I would go up there on the day of opening and have a little look around, but unfortunately I don't. Money's pretty tight, and I'm just trying to focus on putting that money in my investments and pushing along. Hopefully as time goes on, now that I'm on this monthly salary, I can build up the savings once more, get my business emergency fund back together, and we'll be laughing. We've also got another thing here, and this is where Mahmood Kamani had left the board, I believe, of Lad Bible. And I hate how they've dropped Boohoo in here because obviously it's the founders, but it's a different business. Now Carol Kane, the co-founder, has joined the social publishing group's board ahead of the planned IPO. It's really weird that one founder leaves, the other one joins, and this is for Lad Bible. I don't necessarily think Lad Bible's a bad business by any means. I'm a bit curious as to why they've sort of got a foot in that sort of business. I mean, it's understandable that people are non-executive directors of other firms, but it's a bit weird in particular that they are there. Perhaps it's the information, and perhaps because Lad Bible's target consumer base is very similar to that of Boohoo, that they are benefiting from some of that information or perhaps knowledge, although obviously that would be confidential as well. So I really wonder how they sort of play that out, unless they don't specifically mention it, but use that to their advantage. Either way, there is a good bit of synergy here. Boohoo is by far a much larger business, don't get me wrong, but I do feel that there is certainly synergy in terms of that consumer base, and so there's likely something going on behind the scenes here. Lad Bible isn't something I really look for quality news, but I have them followed on probably Instagram, Facebook and the likes, because occasionally I do like to see some random news articles or something a bit different from the mainstream media, which I typically try not to follow. But then again, I've also got some of their other ones like Gaming Bible as well, just for, some old nostalgia in particular. I've actually bought more shares of Boohoo this week. It's again roughly my weekly deposit, but I'm looking to chip away at the overall cost of the position. My average cost is slowly dropping. I believe it's £2.31 per share. It's now down from about £2.33, but earlier in the year I was sitting at around about £2.55 per share. So I'm certainly pushing that average down and positioning myself for a very good long-term position. So the idea is that if I have a low average price but a significant position in my portfolio, that when the shares begin to recover, I can then focus my attention into either building cash or investing in my other holdings like Games Workshop, or opening another position. Aside from Games Workshop, I'd probably be looking to build a cash position to be a bit more resilient. I would like to target around about 10% cash in the portfolio, just to add a bit of balance so that I can at least then buy the dip where needed, but also so that I'm not missing out on too much, as my portfolio size is still relatively small, and having a cash position of larger than that seems disadvantageous considering how long I plan to be invested for anyway. So yeah, I've been buying more Boohoo. I've not been buying Games Workshop, but after that, after Boohoo recovers, which I do think they will, and I think at the moment, and whilst you should not take this seriously, and this is my speculation, I think from the current share price over a medium to longer term periods, I'm looking at 4 years plus, I think Boohoo has at least 100% upside. And that's me being quite conservative in that estimate. By all means, I have no way of predicting a share price in the future, and obviously if the story changes, then maybe it will not happen. But say the story is unchanged, they grow by 20% each year in terms of revenue, they manage to recover their EBITDA margins, earnings before interest, taxes, depreciation, amortization, to around about 9 to 10%, then they're in a fantastic position and they're going to be doing very well and likely at a significantly higher price than they are now. But obviously the cotton prices are being high, online retail is being squeezed in terms of valuations, and so they are struggling. I believe at the moment they're trading at 1.1 times price to sales ratio, which is incredible. Martin Lewis had mentioned on his Money Savings Expert, or his TV show that he's got, I don't actually watch this, but they did a little trick, and obviously this is a trick to save money, so it might be of interest to you, but I like it in particular and how it relates to some of my holdings. They've mentioned that you can buy something and you can leave it in a basket, so you don't actually purchase the item, but leave it in your basket. Forget about it, close the application, make sure you're signed in obviously, and then just leave it for a few hours, maybe a day, and then you'll get sent a discount voucher. I've actually had this before from Boohoo Man. I left my items in the basket, and about an hour later I was sent a 10% discount voucher, which actually is what they say on the screen here. Which, to be fair, with Boohoo and the amount of discounts they have, it really wasn't that big of a deal for me. But it is certainly very interesting, and how these businesses can leverage that information to get you to buy, which is not something I'd noticed before. Whereas he did mention the opposite happens in Tesco, where if you shop regularly, they'll stop sending you vouchers, which is pretty interesting. Obviously, this is unfair on small business owners, but then when a business gets to this size, I feel that it's only fair that they're able to have a competitive advantage such as this. So it's another thing for me to be bullish on. Although overall, as a fan, at least from Boohoo Man's perspective, I wasn't a fan of how they dealt with Black Friday. I felt a discount and the promotions and the push notifications were a bit too much. But I am going to give it, but I also understand why they're doing it. They are trying to push a lot of sales, so it will be interesting to see how this changes over longer term. I have recently downloaded the Burton app, one of their newer acquisitions, and I found that the clothing on that website were actually much more aligned with what I look for in clothing. So I will be quite interested to see how I find some of those products as well, which maybe I'll be ordering if I can spare the capital, of course. We've also got Dunelm setting up a new warehouse for Daventry with roughly 70 jobs up for grabs. The interesting bit here is it's going to be 190,000 square feet, which will be a logistics hub to help support Dunelm Group's focus in innovating and improving its customer proposition so they can grow their home delivery, click and collect operations as a result of the pandemic. Long-term growth potential moving into that warehouse. So it is going to be a 10-year lease, I believe, but I'm sure if they decide there is a lot of value in here, they'll look to buy it in freehold and then have another property on their list. Although Dunelm's business model very much has a lot of leases, so that then they are flexible to go, okay, you know what, this place isn't working, we'll dip. And I think that is a good way to have it. At least then you have flexibility and it keeps you in a good position for the longer term. My portfolio has underperformed this week. I've got this spreadsheet. I will be releasing this on my Patreon in due course. I'm hopefully aiming to make 2 stock analysis this week, as well as part of my paid requests, link in the description down below. And if you'd like to see my Boohoo stock analysis, click the card at the top right of the video. Thank you for watching. I'm Osborne Foreman. Have a fantastic day.